Correct. Post IL&FS, liquidity had dried up. There was a considerable undermining of market confidence in the NBFC sector. So in that context, we had to really focus and see that the NBFC sector makes a comeback. So we very intensively focused on the liquidity situation in NBFCs, the bad asset situation in NBFCs, and I think by the end of 2019, we were almost coming to an end of that problem. Right. Then of course the war came in then of course the COVID came in 2020, 21 was Delta wave, and 22 was the war. So it's been one challenge after the other.
Exciting times for you. But, there's been a lot of talk of late of monetary policy failure, the letter that you've written to the government, which none of us have seen. But I want to ask you if you think, on hindsight, you could have done anything differently. It's a hypothetical question. Hindsight is always 20/20. But do you think you could have done anything differently or would have done anything differently in the last 1 year?
I think we have been on the right path.
Okay.
That is our assessment. I mean, people can hold different opinions. I'll tell you why. You see, the inflation even during 2020 later part, around October of 2020, inflation had gone up. It had touched 6%, and there was market expectation in some segments of the market that RBI will probably increase the rate. There were people who were saying that RBI should now turn the focus to inflation and increase the rate. But our assessment showed that going into January or so of 2021, the inflation will come down. And indeed, it came down. Then 2021, again, in the latter part of 2021, the inflation was gradually going up. In the February MPC, which was very critical, the inflation projection which we had for that financial, for the next financial year, that is from 2021-22, for that financial year, our assessment of the average inflation was that it was going to be 4.5%. The professional forecasters in the market, their forecast ranged between 4.6 to about 5.2%. Whatever it is, inflation was going to be around, in the worst situation, around 5%. We had done our scenario analysis assuming crude at even higher prices at $95 per barrel, $100 per barrel, and we found that the inflation in the worst situation would be around 5%. Now growth was recovering. We wanted a safe landing of the economy during the year 21-22. So in February, contrary to what somebody may say that RBI probably should have increased towards the end of around, let's say, December 21 or February 22. Somebody may say that, but the point is we wanted the economy to have a safe landing, the recovery of the economy, the GDP to be above the pre-pandemic levels. And 21-22 growth was about 1.6% above the pre-pandemic levels of 19-20. I'm giving a long answer, but I think
it's a very interesting
necessary.
answer. Please go ahead.
It is necessary. So, economy was recovering. We wanted a safe landing for the economy in terms of the growth figures. And I think today, looking back, it gives us great satisfaction that last year the economy recorded, last year meaning 21-22, it was 8.7%. And for the current year, our projection, current year meaning, current year, 22-23, our projection in RBI is 6.8%. The National Statistical Office has projected 7%. We will know after March. So the economy has not only landed safely, the economy has remained resilient, notwithstanding this huge amount of global spillovers which are emanating because of the effect of the war, geopolitics, and the synchronized monetary policy tightening, especially by the US Fed and other advanced economies. Inflation, yes, it did go up to 7% after reaching a peak of 7.8% 8% in April, April 22. It has come down. In between, it went up once for 7.4 or so. Now, December figure were released yesterday. It was 5.7. It has come down from 5.8 to 5.7. It's mainly due to softening of food inflation. I do concede that point. But, so therefore, looking at this, now, the law mandates that RBI is supposed to, the RBI Act, the law mandates that RBI has to maintain price stability, basically meaning that maintain the inflation around 4%, keeping in mind the objective of growth. And I think we have kept the objective of growth, which had to be given primacy during pandemic times and thereafter. We have not lost sight of the need to focus on inflation. So therefore, when the war started and, the international prices of commodities, even the food prices went up, prices of edible oil, prices of cereals also went up because of the war in Ukraine. So we did not hesitate to take a decision in an off-cycle meeting last year in May. We were criticized for that. But it was necessary because we didn't want to give a big shock in our June monetary policy. So we split it. We did 40 basis point increase in May and another, we did another 50 basis point increase. So even looking back, I think we have been on the right course. And I think, the earlier theorists of being behind the curve, etc., I think that discussion on being behind the curve is over.
Okay, that's a long answer. Have you just...
Very long answer, but it had to be explained.
In this long answer, have you just paraphrased your letter to the government?
I have said it earlier. It's an intelligent guess which everybody can make, and I'm sure anybody else can make in this room. But broadly, yes, I think, in a way, manner of speaking, broadly, yes.
Broadly, yes. You spoke about this inflation targeting band. Would you go as far as to say, given the way inflation is moving and the kind of volatility in prices we are seeing globally, that whole notion of that target band needs to be revisited today?
I would not think so at this point of time. The inflation targeting framework did facilitate maintenance of average CPI inflation at about 3.9% from 2016 when it was instituted, when it started, to the pre-pandemic position in February 2020. So for those 3 years, almost 3 years, the average inflation was 3.9%, close to 4%. After the pandemic, of course, the situation changed. Now, we have had, one after the other major shocks, the COVID, then the war and monetary policy tightening, the current volatility in the financial markets, etc. But I think it's too early to shift the goalpost. The 4% has a certain meaning. And also, let me add that our target of 4% plus minus 2%, to declare it as a failure, if you exceed that, then only it's a failure. I think that gives us sufficient flexibility in our monetary policy decision making. We utilize this flexibility, the Monetary Policy Committee, the MPC, utilize this flexibility embedded in the inflation targeting framework to tolerate higher inflation of 5%, 5.5%, and even more than 5.5%, up to 6%, because the requirement of that time when we were undergoing the stress of COVID and then the, mostly the COVID impact during those 2 years, slightly higher inflation had to be tolerated because the economy required help. The economy required support. We had to infuse a lot of liquidity. We had to also do a substantial reduction in policy rates. So therefore, the current target of plus minus 2% gives enough flexibility, policy flexibility to the Monetary Policy Committee. So keeping that in mind, I would feel that the 4% target with plus minus 2% is very robust. In the Indian context, I don't think there is any need for any change.
Okay, you say that you would not have done anything differently, looking back. But when you look at the Federal Reserve's actions, I mean, I'm not asking you to pass judgment on them, but as one central banker observing another central bank, would you say they made a mistake?
No, it will not be fair on my part to comment on another central bank.
But
there
are no Americans in the audience.
No, we have a central bank community also. We meet every 2 months. We meet every 2 months in Basel under the aegis of the BIS, the Bank for International Settlements in Basel. We meet every 2 months. Last weekend I was in Basel. We had a meeting, and there we have very free and frank exchange of views and thoughts, and how we look at each other.
You don't think they should have pressed the trigger earlier, the US Federal Reserve?
No, I would not like to comment on that. I think he is the best judge where he is sitting. From outside, many things, we can assume so many things from outside. We can form our own opinion. But ultimately, it depends on the person who is in the chair. He knows so many inside details and so many other, angularities and details, and, he is much better positioned to take a decision. So whether he was right or he was wrong, I think it's not proper for me to comment.
Now the whole focus has shifted. I mean, earlier everybody's focus was on when the Fed will stop raising rates and when they will pivot, start cutting rates once again. But now everybody's saying it will be higher for longer. Maybe rates will remain at this elevated level in the US for a very long time. And that is probably material to us as well, because we can't function immune of what the US Federal Reserve is doing. So what is your expectation of what might pan out there?
No, I'll talk about the global situation, and let me also qualify by saying that I'm not giving any forward guidance or any indication about what the MPC is going to do in the first week of February.
No, I've not asked you that question either.
No, I'm not saying you don't take it as a forward guidance for the MPC's decision to be taken. But if the geopolitical conflicts continue in the manner they are at the moment, if the geopolitical situation continues as it is, if there are no new flashpoints, because international geopolitics, if you see, there could be new flashpoints also. So if the current geopolitical crisis continues in the way it is, it could be a situation of high for long with regard to interest rates world over.
Including India.
Not just United States, but I think world over. Now, including India, I will not say. I have said world over.
India is part of the world.
India is part of the world. But having said that, I would also like to add that notwithstanding the geopolitical tensions persisting, every country, every system, human society knows how to adjust to a new situation. So global supply chains have considerably eased out compared to the supply chain bottlenecks which were there. There has been considerable improvement in the global supply chain situation. New alignments are being developed. Countries are, looking at new sources of supply. United States is looking at, there's this whole talk of China plus one. United States is looking at a situation where the semiconductor supply, they develop alternate sources, that is alternate to China. Yeah. So I think countries will find their way of improving the supply situation, in which event there could be a moderation in the, inflation numbers going forward. And also it all depends on the kind of slowdown, to what extent the depth of the slowdown that countries are going to experience. 6 months ago, the expectation around global slowdown, global recession was much more grim than it is today. 6 months ago, everybody thought that there will be a recession in the European Union. I'm not ruling out that possibility, but it has improved considerably. United States also looked as if they will face a recession, but United States also may avoid a recession and perhaps just have a growth slowdown at best. and maybe a mild or a soft recession for a very, very temporary period. So there are so many uncertainties. Possibility of a high for long is very much there, but these are the, these are the uncertainties, these are the variables which one has to factor in. Very difficult. Last line again, very long answer. The bottom line is that given the uncertainties, one has to be prepared for all eventualities.
So, if it is high for long, you've not said it for India, I accept that. But I want to ask you, you've raised repo rates 5 times. How long do you think it takes for the cumulative interest rate hikes that you've done, A, to be translated by the banking system, and B, to have the kind of effect that you had in mind while raising those interest rates? How much time does it take in your eyes?
You see, normally it takes about minimum 7 to 8 months for the impact to really play out so far as inflation or any other, all other, the outcome of any monetary policy tightening or monetary policy easing. In the easing cycle, the liquidity also, if because injecting liquidity is much easier. So therefore, from that angle, the actual impact plays out faster. In a tightening cycle, pulling out liquidity takes time, so therefore it takes that much more time. So it takes at least 7 to 8 months for the impact to be felt. Our researchers in RBI, of course, it does not reflect the views of the RBI. In the report on currency and finance, which was done 2 years ago, our researchers in RBI concluded that it will take about 4 quarters for the impact to be felt.
1 full year.
That is what they sort of say, that was their view. And they did not say it in that way, they said it in the context of definition of failure of monetary policy. Instead of being 3 quarters, it should be 4 quarters. So in that context, they had said. But I would say that it would take about at least 7 to 8 months for the impact to be felt.
So should I infer that it could remain high for that long for you to have the desired effect?
No. Let us say we take a decision today, the impact of that decision will be felt 7 months down the road.
Okay. Fine. But do you think this is the right instrument, Mr. Das? This is the important question, because I was just reading an article by Joseph Stiglitz, I'm sure you've read the same, where he invokes Maslow, saying to a man with a hammer, everything looks like a nail. And he says that central banks across the world are using a sledgehammer approach to tame this variety of inflation. And this is not the right instrument because it will have the opposite effect. It will not bring down this kind of inflation. On the other hand, it will bring down growth. Now, you may disagree with him, but is there a grain of truth to what he's saying?
You see, I'd like to add 2 points. Given the fact that the current inflation is largely, to a great extent, let me say that to a great extent it is supply side driven factors.
Sure.
It's mostly supply side driven. Given that being the real situation that is prevailing today, a coordinated action between the monetary and fiscal authorities is very important. Sure. In the context of India, I am happy to mention that there has been a coordinated action between the monetary and fiscal authorities. The government has reduced the taxes on petrol and diesel twice during this period. Taxes, that is the import duties on import of pulses, on edible oil and several other food items have also been reduced. There were some restrictions put on steel exports. So there have been measures taken by the government with regard to deal with the supply side issues. In the monetary policy side, we have taken out a lot of liquidity. In fact, I would say that the problem of we are through the Chakravyuh, we are out of the Chakravyuh of liquidity. We have increased the policy rates by 225 basis points. Now, central bank has to do it for 2 reasons. One is to sober down the demand side. Let me not say contraction of, let me not say compression of demand. Let me just say that rebalancing the demand and supply. Sure. Because if the prices are more, obviously the demand is in excess of the supply. So therefore you have to rebalance, you have to balance supply and demand. That is the first thing that the central bank monetary policy action does. The second thing, which is very important, is that it provides an anchor to inflation expectations. Inflation expectations, I mean, widespread, I mean, large amount, several research in several countries have shown, you will know very well, that inflation expectations do play a major role in the future inflation trajectory. If the market, if the stakeholders in the economy feel that the central bank is tolerant of higher inflation, what will it mean? It will mean everybody will start pricing their products assuming that the inflation will remain at the current level or will go up further and the central bank will do nothing. So inaction on the part of the central bank will fuel further inflation expectations, which in turn will be, self-fulfilling. It will give further push to inflation. So therefore, central bank has a primary role in this. Coming to your point that it will lead to a contractionary situation. It will slow down growth. Some amount of growth slowdown can happen. But there is the policy challenge for each central bank, depending on their domestic context, to keep in mind the requirements of growth. Up to what, to what extent you can push the envelope, up to what extent you can, do it, in the sense that it should not be totally detrimental to the, growth objectives and detrimental to your, employment and your growth situation. I use the word employment because in the United States, mostly it is, they go by the employment numbers. In countries like India, we go by the growth numbers, the GDP numbers.
How much sobering of demand are you expecting, Mr. Das? Because, a new credit cycle for the banking system has just begun. Do you think it will be thwarted or reined in by this kind of moderation in demand? Because I was speaking to a banker this morning who made the point that they're still not seeing that kind of enthusiasm on the part of corporates to take up credit in a large way. It's largely still retail.
You are right. The credit growth so far has been largely retail in India in this cycle. And, but my sense that I get from our interaction with bankers is that they have started receiving proposals for wholesale credit. And I do believe that given the importance which is being given by the policy authorities to, let us say, to renewables and to several other sectors like renewables, there will be big demand for credit from the, domestic banking sector. And lot of credit was availed by our domestic corporate houses, particularly, in the, during 2020 or 21, from the overseas markets. So they have met their funds requirement by going to overseas markets at that time. Now the focus is turning more towards the domestic segment, to the domestic, meaning our Indian banks, the banks in India, because there the rates have started going up. And they're all pricing further increases, and there is also uncertainty how much of increase US and other countries will do. So wholesale credit, I think there are signs that it is picking up. Given the fact that our economy has held up very well and it remains resilient, I think going forward we should see, more of wholesale credit demand coming up. Investment cycle, the current GDP growth is sustained mostly by consumption and by investment demand. But investment demand till now has come from government capex. The private capex cycle, I think, is showing some signs of improvement. And going forward, it should pick up further because capacity utilization of the manufacturing sector, our last survey for Q2 showed that capacity utilization for manufacturing sector is around 75%. Even seasonally adjusted capacity utilization was around 75%. Services exports are doing very well. Domestic services sector are doing very well. So I think going forward we should see some pickup in wholesale credit also.
You mentioned services, which reminds me that I wanted to ask you about, on the point of inflation, do you think there is some stickiness in core services inflation, which is a problem that you need to be very mindful of? Because we speak a lot about imported... Please finish your word. Drink your water. There's a lot of...
You can make your question slightly longer.
Okay. I'll take a leaf out of your book from your answers. Now, I was saying that there's a lot of focus on imported inflation in discussions on inflation, but I think people speak less about core services inflation. Do you think that could be a fairly significant part of the problem?
You see, core inflation is definitely... Give me a moment.
Of course.
You see, core inflation is certainly an area of concern. We have highlighted in the last monetary policy statement, if you see the minutes of the resolution of the last monetary policy committee meeting, the focus was on core inflation. In my policy statement, I had also devoted considerable amount, focus. I had given focus on core inflation. Core inflation still remains sticky around 6%. The number which came out yesterday, core inflation is about 6.1%. The previous month was about 6%. Although the momentum of core inflation within that seems to have slightly moderated, but the point remains that core inflation remains sticky at 6%. And that is not a very comfortable number to deal with. So therefore, we have to keep, as I said earlier, in my last monetary policy statement, we have to be very vigilant and we have to really keep focus on the core part of the inflation, because that is becoming sticky and we have to see, and that is something which has to be dealt with. The supply side measures taken by the government, the easing of supply chain bottlenecks internationally and also within India, I think all these factors will probably have their impact, and the monetary policy action taken, which we started in May. I think going forward, they should start working in a more visible or pronounced manner so far as core inflation is concerned. But at the moment, we have to continue the focus on core inflation, or as I said, the Arjuna's eye has to be maintained on, kept on core inflation.
Back to growth. You spoke about the moderation in demand. Now, if there is a significant sobering of demand in the coming year, plus cost of capital goes up for companies, could we be saddled at the end of this credit cycle with another set of bad assets like we had in the previous round? NPLs go up again over 4 or 5 years.
You see, cost of capital, if you have to see it in real terms. Real terms would be taking into account the inflation. We cannot just go by the nominal number of the interest rate. You have to see it as what is the real interest rate, taking into account net of inflation. Now, with regard to your point on bad assets, we have over the last 3 to 4 years, starting with 2019, particularly in the a lot of steps have been taken before that. I'm not trying to say that it all happened now. Number of steps have been taken by the RBI over the years, but especially in the last 3 years, post ILFS and post all those bad asset problem which the banks faced, we have really sort of tightened our supervision. And the kind of things which we are now looking at in the banks, in the NBFC sector, we didn't do it earlier. We have developed early warning signals. We are looking into the business models of banks. Our information system in terms of the data that we get from the banks, that has been further improved. So we get, almost on a real-time basis. Real-time is, I think, will be a bit of exaggeration. I would say that it's an ongoing process now. The supervision by RBI is an ongoing process where we keep on monitoring not only the numbers, but we, within each bank, within each NBFC, particularly the bigger ones, we look at where the credit growth is happening, what is the build-up in bad assets, if any. Like, for example, retail credit has picked up over the last 1 year. We are always mindful of, within retail credit, what is the stress level? What is the bad asset level? Bad asset level is 91 days or more of, overdues. But within that, we have in our system, we have overdues which are more than 30 days, overdues of more than 60 days. So we monitor that. So the moment we see that in a particular sector or in a particular bank, or, there is some stress is developing, we immediately sort of become alert, and we have internal red flagging systems, we have early warning signals, and we immediately flag it to the banks concerned.
Is it at a micro level?
Sorry?
I mean, is it at a bank level also?
It is at a bank level.
Individual bank level?
It is at individual bank level. It is also at the level of individual large NBFCs.
Okay.
And so we immediately flag the issue. And that is why we have also advised the banks to really make their risk management committees, their audit committees more functional, more, more robust. We have issued some guidelines for that. And we just convey it to the banks and request them that you examine it, go back, discuss in your board, take a view what is happening, take whatever mitigation measures are required, please do take it and inform us. So therefore, I think there is a great awareness even among the banks. The banks themselves, I am happy to point out that and the banks themselves today are much more concerned about the problem of rising bad assets. Yeah. So I think overall the whole the whole banking culture, if I can say, that the prudence, a culture of prudence has developed in the Indian banking sector over the last few years.
Going by the metrics that you just spoke about, would something like the ICICI Bank Videocon case have propped up as a red flag alert with the RBI? That too many loans are going to one group, not backed by enough kind of assets. Would it have showed up?
No, I would not. Let me say that I don't want to comment on a specific case.
But it's a very large case.
I don't. It's not proper for me, being the regulator, to comment on a specific case. It's not proper, and I will not comment on any specific
would
case.
Something like
complete.
that? Would
no, I'll just complete. It's a specific case of that. I'm not commenting on the specific case, but in general terms, I would like to say that RBI is not sitting in the bank monitoring each and every check payment, monitoring each and every loan sanction. It's not our job. It is the bank has got a risk management committee, the bank has a credit sanction committee, the bank has a board of directors, the bank has a senior management, a qualified professional CEO assisted by a lot of senior management. It is their responsibility to do the due diligence. We cannot be looking into the kind of loan appraisal and the due diligence which a bank does in each and every case. That's not our job, and that's not desirable. For God's sake, if RBI or any regulator in any country gets into those areas, you are you will kill the credit, you will create, it will sort of be highly detrimental to the credit effect. So therefore, individual cases of failure, they could be due to business failure also. There are, situations where there could be business failure also. But individual cases of failure, it's not possible for the Reserve Bank, because we cannot put ourselves into the role of into the chair of the credit sanction committee of the bank. So we monitor the overall numbers, we monitor the sectors. We don't really look at individual cases of, how the loan was sanctioned. But yes, if a large portfolio, there is slippage, that overdues are building up, if it's a large loan, we would certainly flag it to the bank that, need to focus on these kind of large portfolios.
I was hardly blaming you, sir. You seem to have taken it personally. I was asking whether it would show up in your searches. I was not blaming the RBI for the ICICI Bank video one case at all.
No, not that way. I think it needs to be examined. Did I sound as if I was trying to? No, I didn't see it that way. I didn't see it that way. I didn't see it that way at all. What I'm saying is that our systems, you asked whether the system that we have, whether it will be able to focus on, pick up a case like the one you mentioned. In that context, I said that we cannot become the appraisal authority in a bank. Sure. To that extent, I just clarified the RBI's role. We look at individual portfolios, and if there is a very large loan and if it is showing signs of stress, naturally it will be noticed. And before us, it is actually the first line of defense. In any financial system, the first line of defense has to be the bank management itself.
Sure. Let me rephrase the question in a different way on the same subject. There's a report which came out last week, authored by Sucheta Dalal, where she points out that in the IDBI Bank case, almost all the loans which were made to a group called the Siva Group came from public sector banks. Do you think, or would you agree, that public sector banks are most susceptible to such kind of dubious loan practices which end up in scams and therefore leading to large NPAs? Or is it an unfair assessment?
No, I don't want to comment on individual cases of, what happened in this case, that case. I would not like to comment on that case. The improvement in the banking sector over the last few years is both in the public and private sector. So it will not be fair to just pick up the public sector and say that, this has happened in the public sector. Today, the functioning into the prudent management, all the improvement in terms of governance is visible both in public and private sector banks. So it will not be correct to generalize and put all the public sector banks in one, bracket them and put them into one basket. There might have been individual instances in individual banks. It will not be correct to generalize on that basis.
Okay. My colleagues have a few questions, but before that I want to ask one question on your recent comments on cryptocurrencies. You made a statement that they might be triggering the next financial crisis. It could come from there. Do you think they should be banned?
RBI's position is very clear. It should be banned.
All of them. No activity should be allowed in cryptocurrency.
The technology needs to be supported. The technology of blockchain needs to be supported because the technology has got so many other applications. Again, it will become, I can see the clock there, so it will become again a large answer. So I will try to paraphrase it as much as possible. You see, why we are saying it is going to be, apart from the commonly known dangers of, money laundering, terror funding, what are the principal concerns that we have? First thing is, what is crypto? Some people call it as an asset, some people call it as a financial product. But you will agree that every asset, every financial product has to have some underlying. In the case of crypto, there is no underlying. And I had said it in some press conference that not even a tulip, alluding to the Dutch tulip mania. There is no underlying. The increase in the market price of crypto, various kinds of crypto which start at a particular price, then it multiplies over, in a matter of few weeks or few months. It is based on a make-believe that this is worth so much or it will go up to such and such level. So anything without any underlying, whose valuation is dependent entirely on make-believe, is nothing but 100% speculation, or to put it very bluntly, it is gambling. Now, in our country, we don't allow gambling. If you want to allow gambling, treat it as a gambling and lay down the rules for gambling. But that's not a financial product. So therefore, crypto masquerading as a financial product or a financial asset is a completely misplaced argument. And the bigger, more macro reason for what we are saying is that you see crypto, so-called crypto assets or cryptocurrencies have the potential, they have the characteristics of becoming a means of exchange. That is, they can become a means of exchange of doing a transaction. And most of it is dollar denominated. So if you allow it to grow, assume a situation where 20% of our transactions in the economy, 20% I'm mentioning an ad hoc number, 20% of the transactions in the economy is taking place through cryptos which are not issued by the central bank. It is issued by private companies which are placed all over the world. The Reserve Bank, being the monetary authority of the country as the central bank, will lose control over the money supply in the economy. We will lose control over 20% of the transactions in our economy. Reserve Bank's ability, the central bank's ability to decide monetary policy, to decide on the liquidity of, the level of liquidity that needs to be maintained, the level of money supply, M3, that has to be maintained in the economy, the Reserve Bank's authority to that extent will get undermined. It will lead to a dollarization of the economy. And please believe me, these are not empty alarm signals or empty, this can happen. 1 year ago, in the Reserve Bank, we had said that this whole thing is likely to collapse sooner than later. And if you see the developments over the last 1 year, climaxing in the FTX episode, I think I don't need to add anything more.
If you look at the previous stints of your predecessors, the one thing which was common is that almost every 6 months or so, there would be some signs of strain between the RBI and the government. Pulls and pressures, differences in opinion. None of that seems to be visible right now. So your admirers or supporters would say that's because you've mastered the art of relationship management with the finance ministry. No, I mean it as a compliment. But your critics would say that you are too compliant with the government, and in that you've sacrificed some of the central bank's autonomy. What is the truth between these two?
I think it's for you to judge.
No.
It's for you to judge. So, no, somebody has to tell specifically where the central bank has compromised its autonomy. Making, sweeping statements is not fair. Somebody has to say where we have compromised on our autonomy. Initially, there was this talk of surplus transfer and all that, but surplus transfer was determined and decided by the recommendations of the Bimal Jalan committee, which has been accepted by everybody. So it was the calculation which our accounts department did, placed it before the audit committee, and that is the surplus number which is coming. I have no discretion to increase the surplus transfer or to decrease the surplus transfer. It is audited and the numbers are placed in the public domain. Everybody knows about it. Autonomy basically means autonomy in decision making. I'm not commenting on, any other. I will just focus on my tenure. I think in any institution, whether it is central bank vis-a-vis the government, or it is, it is between, let us say, a management of a company with its board of directors, in any institution, in any organization, interface with others requires consultations, requires active engagement. So without proper engagement, there could be areas of communication gap. So we should not allow that situation to develop. In my first press conference when I took over in December 2018, I had said that my approach would be consultative and I will constantly engage with the government to explain to the government why we have done, why we have done what we have done. That does not mean that I have compromised our position. But I think as the government should know the background of important decisions. When we do, for example, the monetary policy increases, we have been able to do it. Nobody has prevented us, nobody has stopped us from doing it, contrary to what may be the perception outside. We have done what we wanted to do. The Monetary Policy Committee, constituted by the government, Monetary Policy Committee took decisions. So I think ultimately at the end of the day, what is important is to maintain good communication and to constantly engage. I think that engagement and that communication between the government and the RBI is very important. Having said that, it's not as if there have not been any differences of opinion on certain individual issues. But all those issues have been internally resolved through discussions.
One question from my colleague Siddharth Zarabi. Siddharth.
Thank you very much. Governor, you spent a lot of time in North Block.
Mike.
Governor, you spent a lot of time in North Block and now at Mint Street, as we call it. And you covered a lot of ground in this interaction. My question is very simple. Going forward, is monetary policy going to be a T20, a one-day, or a test match? And I ask this question because many in the audience may perhaps know you have some interest in cricket. So I use that opportunity to pose that question to you.
I have great interest in cricket, so we can hold another session on cricket if you wish. But, having worked in the North Block, I think what is also important is that, I know the corridors of North Block. I know which, corridor takes a right bend where, or a left bend where. Now I'm familiar in the Reserve Bank, so I can close my eyes and enter into Reserve Bank and reach my office. I know where we to take a turn. So on a more serious note, I think you cannot classify it as a T20 or a limited over 50 over the. You see, Virat Kohli is good in T20. He is good in limited over one-day cricket. He is also good in Test cricket. So the RBI has to function and perform both in a T20 match, in a 50-over match, as well as in a Test cricket. Our effort and endeavor is always to optimize our performance to the best extent that we can. We put our best foot forward.
Governor, we are out of time, but thank you very much for a great session. And thank you very much for accepting our invitation today. A great pleasure talking to you today. Thank you very much.
Thank you very much, and thank you very much for your patient hearing. I think we have overshot the time,
That's all right.
primarily for my, longish answers, but I thought it was necessary. I can see your colleagues are getting very impatient, but thank you once again. Thank you very much for inviting.
News is about putting people first,
Just look at the queues right across.
about asking the right questions to those in power.
It takes no sides. माँ का दर्द एक दर्द कोई नहीं समझ सकता उस दर्द को.
It reveals, it heals.
Angry people came out on the streets.
Is this the kind of justice system we want in this country?